Hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Are you still here, friends? Did you survive the events of the last couple of days? Do you still have all your bags? If you've been following this channel with any regularity, then the events of the last couple of days were no surprise to you. The liquidation cascade that we suspected might be coming in the futures market played out as we anticipated. A bunch of leveraged long traders got wrecked. We will look at the derivatives market today. We'll check out the price chart, we'll see what the damage is, and then we'll see what happened to futures. And then we will move to on-chain and investigate how the events of the last couple of days have affected the holders of spot Bitcoin. Have they been moved to exit? Have we seen any increasing spending activity? We will answer all of those questions today. If you enjoy this content, make sure to give my video a thumbs up and subscribe to the channel. By enabling the bell icon, you'll hear about all my videos the minute they're released. We've got a lot of things to talk about and many charts to look at, so I won't keep you waiting any longer. So here it is. Here's our price chart. It looks pretty ugly, I won't lie. When we talked the other day, we were up here, and the scenario that we were preparing ourselves for was a futures flush and a test of lower prices. This 53K level has been an important technical floor as we've been building support here in the last couple of weeks and looking to see if the market would catch a bounce or if it needed a correction. We got our answer. It needed a correction. And once price lost 53K, it was a very quick and dramatic trip down into the lower 40s. I was watching it in real time, and it happened so quickly, it was hard to know where the bottom would show up. That is what a liquidation cascade looks like. That's what happened here on September 7th, and that's what happened back here on May 19th. We had similar events. And in a moment, we'll go look at various charts that explain the forces behind this move. But for right now, let's continue looking at this price chart a bit longer. Price did come down here and tested 42K, which is close to the support level from the lows in September before the rally that sent us to all-time highs in October. It is possible that over the next couple weeks, as price looks to recover, that we come down and test this low area again. Once you set a low and bounce up, after some consolidation, sometimes the low is tested once more before price is able to move forward. So we may get a sweep of the lows over the next few days or couple of weeks, because I do still expect December to be a quieter, risk-off month, and I'm not sure that the market has the proper ingredients necessary for an aggressive V-bottom recovery out of this area. We hop over here to an hourly chart. Here are the liquidation candles, and you can see for the last couple of days, price has hardly done anything at all. This is sideways. This is lacking any and all direction, and I think that as long as we are still on the weekend, price is just going to do this. Futures open later today, and we'll start to get an idea of how the legacy markets may be reacting to this move from Bitcoin. This happened after hours for the legacy markets, and they haven't yet had their opportunity to respond. I'm waiting to see what the S&P and Dow futures look like later today when they come out. And as we enter this next week, we'll start to get an idea of how the greater market feels about this Bitcoin crash, which I feel was aided largely by the weakness in the legacy markets. There were probably some traditional finance guys who got a margin call on Friday after a terrible week in equities. And what's the first thing you do when you get a margin call? You sell out of your risk-on assets to pay the note. So I think we definitely had some selling pressure on Friday from some traditional finance guys looking to cover their margin calls. And when you couple that with the excess leverage that we saw building up in futures and the fact that so many traders were looking for 53K to be a support level, when you had all these factors working together, creating an event at this moment here seemed almost like an obvious trade for the big players in the market. We'll talk about that a bit more in a moment. Here is our derivatives dashboard. At the top, we've got open interest, and here I'm just showing you the perpetual market. If I zoom in over here, you can see the drop of Bitcoin from this one day. And this level that we were looking at is extremely elevated. This is the highest open interest we've been able to sustain all year. And look, we know that some of this volume has increased as a result of the futures ETF that launched on the Chicago Mercantile Exchange earlier in November. November. We know that volume increased from that, but it isn't ubiquitous and it doesn't explain all of the leverage, especially since we're here looking at the perpetual chart, which doesn't even include the ETF from CME, right? That's in the expiring futures contracts, which show up on the regular futures open interest chart. So we even had high leverage in perpetuals, which signaled to myself and other analysts that we were approaching a cabin pressure release moment. The market cannot stay long biased with high leverage and price weakness. Those factors do not sustain. We had to reach a moment where a direction was established in the short term to create action. As we spoke about last time, when price hangs around in an area for a period of time, you squeeze out all of the actors who felt the need to make decisions there, and eventually the market starts losing interest. Well, as we've been hanging up in these high prices and spot demand has been declining and we've seen on-chain spending declining, the interest by these speculative traders was only continuing to rise. And so those dynamics were counter to each other. And that is what led us to say in the previous video that we expected to see some volatility. Here is a look at open interest for the entire market. So over here, I'm showing you the perpetual market, which has this funding rate mechanism that we'll review in a moment. But this is futures open interest for the whole market, including the expiring contracts, including the ones at the Chicago Mercantile Exchange that are related to the futures ETF, all of them, right? Yesterday's move here flushed out 58,000 Bitcoin from the futures market. That's about 15% of the total leverage in the system was rinsed in a matter of an hour or two. The total dollar amount of this loss was about $5.4 billion, a very large sum of money, non-trivial indeed. And if we compare that event to all flush out events of this year, so here on this chart, I'm showing you the 1 day change in futures open interest. So the single day change, when you see big spikes, that means in 1 day, the value of the total futures market changed dramatically, up or down. This was our event yesterday. As you can see, minus 58,000 Bitcoin rinsed from the market at the same time. And this event, in terms of sheer Bitcoin size, was the second largest liquidation cascade of this year. The largest one occurred back here on May 19th when we had 79,000 Bitcoin liquidated in a matter of like an hour or two. This was an extremely volatile day. It was a huge $10,000 red candle, a big Darth Maul candle on the price chart. And this moment squeezed retail out of the market for the next several months, and they still haven't returned. This was a very catalyzing event for many. We've had a couple of other big liquidation events since then. This happened in July. This was a short squeeze that helped propel us out of the summer bottom. This was a long squeeze that occurred on September 7th. This was the 53,000 top that we marked on our price chart. And this liquidation event here is what happened when El Salvador made Bitcoin legal tender and some derivatives traders thought it would be a good idea to fade the news. But the event yesterday was larger in Bitcoin size than the September 7th flush out or the short squeeze in July. It was bested in size only by the May 19th crash. And what did that do to the market? Well, we can see that the funding rate has flipped negative for the first time in months. If I zoom out on this chart here, you can see that this is the blip that we just got from the last few days. There was a bit of a futures reset here after the initial rally out from August and July. You know, price came up out of the summer bottoms. We hit September, we got the liquidation events, a couple of them. Here was the Evergrande uncertainty in late September. And after this event, more sell-offs, we got a reset in the futures market. But since this moment, we've had a consistent positive regime. And as this was occurring, open interest was rising. So we felt that pressure was building up in the system. And when too many traders have a similar bias, in this case a long bias, taking the other side of the trade can almost become too obvious. So we got our reset, we got our liquidation cascade. Whenever these events occur, sometimes they can be so violent, the reversal can be so violent that it shoves the funding rate across the median line and in the other direction. So this doesn't necessarily mean, this value here doesn't necessarily mean that this was the moment a bunch of shorts stepped in to counter the move. That's not exactly what we're seeing here. And it's important to know that we never can say with 100% certainty what the ingredients are inside of here. We have to make some inferences based on trend and the various data points at our disposal. So it's very possible there are some shorts in here. But what really occurs when you get a dramatic liquidation event, the momentum momentum that creates that cascade of sell orders pushing into the next stop loss, which liquidates into the next stop loss. That momentum can shove the premium down and push the funding rate into the negative. It's like when you slam a ball on the ground really hard and it bounces way up in the air before coming back down. This is a similar effect. The sell-off was so aggressive that it forced the underlying asset down below spot heavily enough that it created a negative funding rate. But we can see it's been recovering here in the last few hours. And I plan to give this another day or two to really get an idea of where I think the market is headed as a reaction to what occurred yesterday. I'm taking special care not to get too zoomed in on what occurred and what we think it means, because the closer we get to the hour-to-hour movements in price, the less we will be able to project and model what we think will happen in the future. So I'm trying to keep a step back from this. And it seems to me that the market is recovering. This negative funding reset here is exactly what needed to happen, and it seems healthy. If you look over at the chart to the right of the funding rate, this shows the liquidations that occurred on the way down. And this axis is saying that, you had about $150 million liquidated in a couple of different hours on the way down. And I gotta tell you, I don't think I believe these numbers. So we at Glassnode, we take this data from the various exchange APIs. It comes in however they deliver it to us. And my suspicion is that the exchanges are not incentivized to report on liquidation totals with integrity. It's not in their best interest. And it's hard for me to reconcile when we have 58,000 Bitcoin closed out of futures open interest, $5.4 billion worth of open interest is closed in a single day, and we're only registering about 300 million of that in liquidations. Those numbers don't vibe up for me. So I'm having trouble trusting the dollar total of these liquidations. I do think the moments, the trends on the line chart itself are important to look at, but the dollar totals might not be so impactful. I would rather pay attention to the dollar totals leaving futures open interest as a whole, which was many billions of dollars. Now, price falling also reduces the USD value of futures open interest. That's why we look at it in BTC terms, like we did on this chart here. But in raw dollar terms, it was over 5 billion that was taken out of the market in a single day. And when we come over here, it's only counting 300 million, 350 million in liquidations. So I ignore this axis right here for now. I feel like maybe it's not being fully reported. So this data that you're looking at here, this is really what led the charge on Saturday. We had a lot of leverage built up in the system. There was a heavy incentive to push it just a bit lower. There were a ton of traders who had stops below 53,000 because of its strong technical support, because of these factors we've been discussing. And as weakness in the legacy markets last week bled into Bitcoin and we started to creep down towards 53,000, it became a very enticing opportunity for those big bags and big players who actually make markets. The whales, the big time investors, and the savvy institutional money who truly make markets. When they see an opportunity like what we had on Saturday, it becomes too obvious. You get some legacy weakness. You get a few hedge fund guys who get margin calls. So what do? They sell a few of their risk-on assets to pay the note. That means they sell a bit of Bitcoin, and price is looking weak on Friday. A couple of big sellers throw out some orders and push price down just a bit at a time until it finally touches a key liquidation level. A couple of longs get squeezed out. Their closures become sell orders, which then push price down further, and it triggers another liquidation. And before you know it, the dominoes have been knocked over and you are in a full-blown cascade. That kind of blood in the water is precisely what big money waits for. Those are the opportunities where big fish feed, and it's where dumb money relinquish their bags. This is how markets are truly made, and the writing was on the wall for what we just experienced yesterday. So what does that mean for on-chain? One of the reasons 53,000 was important to us is because it represented the short-term holder cost basis, which has been an important bull-bear oscillator and a place where price often catches support when the market has strength. Those things are true. They still remain true, but none of them matter when you get a liquidation cascade in the derivatives market, which is a separate entity from the on-chain ledger that makes up Bitcoin proper. So we tested the short-term holder cost basis and it failed. It broke below. We're now seeing price test lower areas, and many short-term holders are now underwater. As a group, they are in loss. This does not mean that the market has been invalidated. This doesn't mean our general bull thesis has been invalidated, but it does mean that we need to watch this closely over the next few days. We need to see if this market finds a way to recover from these areas, or if short-term holders need to spend a considerable amount of time in loss. If they do, we may sweep the lows again. As I mentioned over here on the price chart, we may continue to sweep these lower values and move sideways until the market is able to recover. This is not a bear market. It is bearish. It is an accumulation period. It's a moment of weakness for the market. And if we are to experience a similar event, maybe not quite over 3 months, maybe it takes less time. If we're to experience something similar like that, it looks like an opportunity to grow bags for those who are slow accumulators, for those who are dollar cost averagers. So over the next couple of days, the next week or two, watching the short-term holder cost basis and how it interacts with price will be something I'm keen to watch. This level did not provide the strong bull support we were looking for, but it also was made very difficult by excess leverage. And when you get such rampant speculation, it's hard for the market to behave in an expected and contained fashion. Occasionally, you just need a dramatic event to shake out weak hands and to create some new opportunity. The market had felt top heavy the last couple of weeks. We were wondering, where's the momentum? Where's the excitement? We just created new all-time highs twice, and we're not seeing any retail interest. So it's not a surprise then that the volatility building up in the speculative side of the market bled into spot and created this cascade. Here's a look at our long-term and short-term holders. I've been asked about this chart quite a bit in the last couple of days, and here it is. It's making almost no move. Long-term holder supply is essentially horizontal from where it was in late November. Long-term holders have only distributed about 1.5% of their total supply since they began distributing in October when we made the new all-time high. From this moment, only about 1.5% of their supply has left this group. Additionally, they have only distributed about 5% of the supply that they accumulated from March to October. So from this moment here, all the supply that was matured and absorbed by long-term holders, about 5% of it has been sold in terms of the amount of BTC. So largely this group is continuing to hold up. We're not seeing this kind of distribution event like we saw last year, which is the kind of distribution event they usually have. We've not yet seen that. They're still holding up sideways. And it's almost like a little stepwise function. It looks like a big player is just kind of dollar cost averaging his way out of a position or something. And we can see that this small distribution of coins here has manifested itself in a very gentle rise in short-term holder supply. This dynamic has not changed from the previous video, but I wanted you to see it and put your eyes on it so you understand what's happening. So far, this group isn't moving, which lends credence to the explanation of what happened to the market over the last day and a half, that it was largely led by futures liquidations, not spot selling, not panic by hodlers. None of that is happening. Here's a look at spending behavior on chain. You can see on the net P&L chart on the top left here, here's our realized losses. And it's the second or third lowest level we've had all year. But a dynamic that we've spoken about on this channel a couple of times that I am keen to continue pointing out is that we're seeing less profit taking and more loss realization. And why does that matter? Because we have a ton of holders of Bitcoin that are sitting in massive profits. I'm not talking about people who bought right here. I'm talking about people that have been holding since before February. The vast majority of Bitcoin holders are in very high levels of profit, and none of them are realizing it. When I say none, there are a handful of coins each day that get spent out of older coin groups. That happens. But materially, in terms of its impact on the market, it is almost non-existent. We're seeing declining profit taking, rising loss realization. And for loss realization to be occurring occurring at this moment, these people must have coins from high prices. We look at the purple chart in the lower center of the screen. This is the spent profit ratio of short-term holders. Short-term holders are people who have had their coins in their possession for the last 5 months. They are the counter to the long-term holders that we were just speaking about. And short-term holders are realizing increasing losses. You see the way this has dipped down? We had been watching a higher lows structure building on this chart from the May bottom. And it looks like maybe that fractal has now been reset and we're starting to form something new. We've got some lower lows here and we need to recover from this area to get an idea of what the trend might look like moving forward. But what I think will happen is we'll set these lows here, and I'll zoom in a little more. We'll set these lows here on short-term holder spending. It may take a couple of days of chopping around here, and then we will begin setting higher lows again. It will begin following a pattern similar to this, with higher highs at the top, higher lows at the bottom, and kind of a controlled channel back up into profitability, just kind of coiling back up. I expect maybe we will see something similar here. Part of the reason that I think we will see something like that is because we're not witnessing large profit taking. We're not seeing long-term holders dumping out of their positions. So the market in general still looks very firm. It looks very convicted. And unless that signature changes, it's difficult for me to adjust my core outlook on Bitcoin as a whole. The hodlers aren't doing anything. We've got these losses from short-term holders, but if you look at the spent profit ratio of the entire market, not just short-term holders, it's still hanging out at the cost basis. It's still hanging out right at break even. We haven't had like a massive print down here below. Maybe we'll get one over the next day or two. We'll keep an eye on that. This is a weekly moving average, so it's a slight delay. But I would have expected to see a big print down here. I feel like a lot of the short-term holders that bought up here that might be wanting to get out have already done so. They would have had opportunities here to do that before the liquidation cascade. So it's possible that we just don't have a huge reservoir of panicking holders that are trying to exit. There's only so many of them. And you know, the way the market is behaving right now seems that we have not rattled the conviction of very many of the hodlers just yet, which bolsters my own confidence. If we peep in at coin destruction, this gives us an idea of the age of coins moving on chain, and all of these values are still very low. The average spent output lifespan, the green chart at the top here, this is the average age of coins moving without volume included, and this dormancy chart to the right of it in pink is the same look with volume weighting. So they're both a perspective of the age of coins transacting on chain. One of them is weighted with volume, and the other is weighted purely by transactions. It doesn't care how much Bitcoin is in them. So we look at them together and both of them are declining. We zoom in on a 3-month time frame for these. They've both been declining into price weakness, which means that older coins are dormant. We're seeing activity from mature hands declining, and most of what's occurring on chain each day are younger coins shuffling hands between the same investors. A little uptick here in spent output lifespan, but still quite low. I quickly wanted to show you exchange balances. I think we looked at this in the previous video, but after a big washout, it's always good to touch in with the balance on exchanges. And we can see we've had this multi-month, 2-year-long downtrend of exchange balances. We had a large influx to exchanges during the sell-off in May, but we're not seeing that behavior repeat itself now, even though we had a very large cascade event. There was a small uptick in exchange balances a couple of days ago. Looks like a de-risking size of inflow, but largely this value is unmoved. Nothing really to write home about. Here's a look at illiquid supply shock and the whale balance with exchanges and miners taken out. So illiquid supply shock is here in orange, and we haven't looked at this chart as much recently because it's kind of just been on a straight uptick. But what this chart represents is the amount of supply held by strong hands, the amount of supply owned by hodlers. Illiquid types are entities on chain with very low outflows. The majority of their activity are inflows of coins to their wallets. They may sell a small amount, a small percentage, or they may sell 0 of their coins. People with long-term time horizons in Bitcoin, hodlers, all of those folks who dollar cost average, they all represent illiquid supply. And they have been growing their stacks all summer, all year basically. With the exception of this one event here, the supply has just been growing and continuing to be absorbed by stronger hands. There was a very small, you can barely see it on the screen, very small downtick in illiquid supply shock in the last couple of days. And I believe this little blip is this little blip. flip because exchanges represent liquid supply. The coins shuffle around a lot. There's a lot of flows in and out to those addresses. So exchanges are highly liquid most of the time. And I believe that this small inflow here to those exchanges represents this tiny downtick in the orange line on this chart. And additionally, if we look at the whale balance, they've just been kind of following the market. There's not a lot to write home about what the whales are doing right now. But I get questions about this chart and I wanted to show it to you to let you know that I do read your comments, but I don't always show you every chart in every video because they're not always contextually relevant to the time. So what have we got going on here? Well, we have the same on-chain signature that we've had since earlier in the summer. This channel has been talking about a macro shift in Bitcoin that occurred starting in early 2020 when the money printer got flipped into overdrive. Bitcoin began to evolve and supply began being absorbed by strong hands at an aggressive rate. That is the growth of this orange line on this chart here. And many of them are whales. That's why you also see the blue line growing in tandem with it. But let's take the whales off. It's really about these illiquid types, and they're continuing to grow their stacks and now have a recent market high in terms of total supply owned by strong hands. This is happening in the face of a massive liquidation event that scares the crap out of casual investors. Smart money has not been moved. Exchanges have not been rushed to. Older coin spending is still on the decline. Long-term holders are not distributing yet. The short-term holder cost basis was tested and broke, aided in part by a huge futures liquidation event, a single day flush of Bitcoin out of the futures market that totaled well over $5 billion of value. We spoke of this event occurring before it happened, and we said that our bull thesis would remain intact as long as these other cohorts that we've been speaking about, strong hands, remain convicted. None of those trends have changed, and in fact, what has happened is that my confidence in our ability to assess this market has grown. We have taken a reasoned, objective approach to the data, and it so far is bearing fruit for us. We may still see rises in open interest and more events like this in the future. It's almost a guarantee. But what we can do as a community and how I can help is to raise awareness about these events so that all Bitcoin investors become more educated on the asset and the various market forces that play in it. We have a question from one of our viewers. Caitlin says, I hear analysts frequently say the Bitcoin market is over-leveraged and needs a flush out, and that's fine. But the problem is that over-leveraged longs step right back into the market a week or two later, and Bitcoin bounces back from the flush, and we're right back in the same position as before. How does Bitcoin get to 250K higher prices in a few years when every 2 weeks we flush back down? No one ever answers this question. Caitlin, that's a great question, and it's something that I've thought a lot about. And I can't give you a clear answer. I'm not Nostradamus. But what I can say is that Bitcoin is still very early on in its adoption phase. The market is still pretty small for what it is, even though it's spent various points this year being a $1 trillion plus asset. The market itself for Bitcoin is still quite small, and the derivatives market is not bound by the adoptive growth of Bitcoin. It's its own entity. And they can speculate on Bitcoin and continue to expand and offer new products while Bitcoin itself looks for adoption. So I think that these two forces, these two markets, will continue to butt up against each other for the foreseeable future. But I do anticipate a scenario in the realizable future, in the relatively near future, where the market for Bitcoin is large enough that what happens in futures day to day, week to week, maybe isn't as scary. And I can tell you that whenever we reach a point where casual retail shows up again and we have people FOMOing in and just pressing market buy and they don't care what the price is, when we get into those kinds of market scenarios like what we had earlier this year, futures will not be able to stop the rush of people trying to buy Bitcoin off the exchanges. So until we reach a point where the base layer activity is so large and there is so much value settlement happening each day that the futures market can't really move it one way or the other in any dramatic way, until we reach a point like that, this is our reality. We move up, then we come back down. We move up, then we come back down. But if you zoom out on your chart, if we go over here to a price chart and we look at a weekly chart, we've been experiencing these futures liquidation events and price has just been continuing to rise. You know, if you ignore the one candle, this is the most recent candle, we've still been continuing to grow out of the summer lows despite repeated futures liquidation events. And the reason is because these events are having less and less of an effect on the actual physical holders of spot Bitcoin. Those are the people whose sentiment truly determines the strength of the market long term. And to this moment, none of them have changed anything about their behavior. In the coming days, I will be watching the short-term holders very closely. I want to watch their spent profit ratio, and I want to watch how they react to their cost basis being failed. Will they step in, recover price, and will we continue to move forward? Or do we need to spend more time with short-term holders in a period of loss for this market to recover properly and move forward? Those are our current unknowns. That is our assessment of the market today. We had a massive futures liquidation event that was led in part by forces I believe to be smart money and the makers of markets. There was so much leverage built up, and 53K was such an obvious support point that all it takes are a couple of convicted big bag sellers to put the right order on the right exchange and push the price into the liquidation zone. And that's exactly what we got. But as we've seen, all of our on-chain, strong-handed cohorts look exactly as they did a week ago and a month ago. So as we discuss over and over here, when you see a big move in price, when you see something that appears scary, take a step back, observe the data, and consider all inputs. Only a reasoned, objective approach to the markets will lead to success long-term. So we've got to stay rational. It's hard to see a big 10K red day and not feel upset, not feel uncomfortable. But the longer you're in this market and the more you train yourself to react to bad prices by looking at data, the less those moves will have an emotional impact on you in the immediate term. So I hope that I have been helpful today. I hope that I have shown you what the market is doing and given you an idea of what we might expect going forward. December so far is playing out as we anticipate. We may still see a bit more sideways chop and volatility. We may test the lows of the liquidation zone again. All of those will be important to watch in the next few days. Make sure you're following me on Twitter at TXMC Trades. I was posting in the moment as things were unfolding the other day. And if you had been with me on Twitter, you would have seen what we were talking about. I hope you're having a great weekend so far. We're going to give the legacy markets a day or two to react to these events. And possibly around Wednesday or so, we'll make another video and see what's been going on. If you have any questions or concerns about the topics we discussed today, please leave them in the comments and I will read them. I am learning right along with you. And if there are factors you feel that I'm overlooking, I would love to hear about them. So we'll give this market a couple of days to settle out and we'll talk again soon. Take care of yourselves, friends, be kind to one another, and we'll speak in a few days. Cheers.